Headed next, Kunal. Hi, morning. Till how long are we going to see this seesaw?
Difficult to say that, Aisha, but yeah, I think should be healthy for the markets overall because I think we are seeing a positive churn across the markets. You're looking at fresher sectors evolving. Over the last 1 or 2 months or so, we've forgotten actually the rally in the auto indices and the contribution these stocks had done for the latter part of 2025. Those stocks have made a good comeback for themselves in the last couple of days. You've seen fresh breakouts happening post results, of course, for names like Aisha Motors, M&M, even Maruti, etc. I think these stocks have managed to make a good comeback for themselves. So I would believe that this could probably be a space which could try and offset the losses which the IT sector has been contributing. The markets are little, I would say, worried with the kind of sell-off which we're seeing across, few heavyweight sectors like the IT. I think that's one of the major reasons why the index is unable to lift off. And also, I think add to the fact that there has been some bit of straddle writing at 25,800, 26,000 strikes for the indices. That's also adding towards the ceiling pressure for the index over the near term. But the setup across the globe is absolutely strong. So I don't have any two doubts that we would probably break out on the upside. But I think, again, it's a matter of time.
Okay. And what sectors do you think are going to be part of this seesaw? Will IT continue its weakness, and will Motown and the likes of SBI continue to hold up?
Yeah, so there's lack of buying for the IT, even at a point where names like TCS we were discussing yesterday, which is almost at a 4-year or a 3-year low from 2021-22 levels. So when you see such kind of a price points for the stocks on the larger cap IT names, and that too at a point when the markets are very buoyant, there's bound to be a point where investors or value investors realize that maybe that this could be a good time to buy the stock. But the fact that there is not major buying which is happening indicates that maybe investors are just about wanting to wait out and sit out and let this entire corrective wave play out. So I think that's one of the reasons why I would believe IT stocks may probably not try and show major signs of strength. There could be periodic bounces which could happen, but no major signs of trend reversal is what I would expect for the IT index for the near term. We've been discussing that there could be a possibility of a 33,700, 750 for the IT index, which it could test before it at least shows some signs of resemblance of a support over the near term. The other sectors which could try and contribute, I would sense that the metal stocks could make a strong comeback. So we're looking at many of the metal names which over the last few days have gone through a correction. These stocks have started to show some signs of positive indicator action. So I would sense metal index could make a good comeback for itself. Energy stocks have been doing very well for themselves. That's another space which I would believe could probably see a breakout on the near to medium term. You might probably look at financials more on the NBFC side, which could start to look attractive. You saw yesterday, in fact, day before yesterday, names like Shriram Finance, which did very well for itself. So I would probably believe that that pocket of the market could also look a little bit more stronger. So there are few pockets where traders can concentrate on if I think someone is looking out to play the trend.
Kunal, how do you look at 26,000 barrier? When you have, when we started maybe at the series, we were trading in a range of 25,500 to 26,000. Now we've been for last couple of days about 25,900, and there's a support which is getting built up at 25,900. But again, there are a lot of call writers which are at 26,000. So we're just narrowing the band of range, and either it will break 25,900 on the downside, or it has to breach 26,000.
See, I would sense that a break of 25,900, even if it happens, it could be maybe a 100 point or a 150 point out correction, but it could not be a correction which could probably unsettle the market trend. Because you saw the last week also there was a break towards 25,500 mark, and it was bought into very, very strongly because in a matter of just 1 or 2 days, the index managed to jump back to its 26,000 levels. So there is appetite from investors, traders to buy the index at lower levels, and especially for guys who missed out on buying the index pre the the tariff news flow. So I think that could be one of the reasons why the dips will be strongly bought into. Now the other reason is, you look at the FII numbers also. We were discussing this, that the numbers have jumped from 11%, 12% to 21, 22%. It's a very gradual jump which is happening from the or shift which is happening from the FIIs on the index long positions. If this number increases dramatically, then you see the markets breaking out of the shackle of 26,000 and then gaining momentum. But if it's very, very gradual numbers, like maybe a 1%, 2% kind of a jump in the open interest or a rise in the open interest on a gradual basis, the index will take its time to break 26,000 mark. I think that's one of the major reasons why we are just about trying to nudge through the 26,000 levels, multiple attempts, which is happening on an intraday basis, but not really a forceful breakout as such.
Okay. So Kunal, what stocks would you choose for today?
So from the auto bag, TVS Motors is something which looks extremely attractive. I think it's been a classical breakout stock. It's now nearing 3,900 as a breakout on the spot level. So would look out for TVS Motors as a buy. 4,000, 4,020 could be a near-term target for TVS Motors, and stop loss could be kept at 3,800 mark. And interestingly, from the oil marketing space, IOC I think is something which starts to look very attractive. In fact, the stock has confirmed a breakout on the line chart basis on the daily as well as on the weekly charts, trading above 180 levels. So would look out for targets in the range of 188 for IOC, stop loss at 176.
All right, with that, let's look at a very